Hello guys, in our previous video we're looking at how we can use my special Bollinger Band setting combined with the default Bollinger Band setting in order for us to get our trading entry. So looking at my chart now is my special Bollinger Band. You can see the setup, the period is 130. Deviation is 2.0, the shift is 0, you apply to close. So in this video, I'm going to add the both Bollinger Band on the same screen. Now, I am going to add the default Bollinger Band, and you can see the default, the period is 20, deviation is 2.0. So I'm going to change the color. Let me change the color to something light, and then I'll reduce the thickness, and then beautiful. So the blue line you are seeing on my chart is the default Bollinger Band setting, while these green ones is my special Bollinger Band setting. The question now is, how do we use the default Bollinger Band setting to find entry? It may look a bit complicated, but I'll try to make it simple as much as I could in order for you to understand. First, you will begin from either H1 or H4 in order for you to determine the trend of the market. It is important you know the trend, because the trend is always your friend. So be trading in the direction of the trend. So if you look at this particular price movement, you will realize that price has been bullish over time. In this scenario, price has been bullish. We're having higher high, higher low, higher high, right? Until this point where price came and break the structural point. So at this point, you can see this price break the structural point here, and then the structure was compromised, and here now we have a typical break of structure at this point. So now that the structure of the market has been broken, has been compromised, what do we want to see? If you are conversant with my trading system, you need to identify your point of interest. You need to know your range. What is your range? The range is this impulsive move that breaks this structural point. This particular move break, this is the structural point. So we are looking at how you can get a sniper entry. This impulsive move that breaks this structural point is our range, right? So now that we have determined our range, what is the next thing we want to see? Identify your point of interest. Now you can never take the point of interest away from trading, because you won't be making entry and exit anyhow. Your entry will always happen at your point of interest. So if we look at this move, now I am referring to all of this move. This is my range. This particular move to this downside is what I am referring to as my range. Yeah, all of this bearish move that you are seeing in this shaded portion is my range, because this is the move that break this structure. So I will use my Fibonacci tool first to mark my Fibonacci, to mark my levels. So I'll pick up my Fibonacci tool and I'm going to mark out this level. So as you can see, I am marking the week to week, and that is beautiful. So now I have marked out my Fibonacci level, and this is exactly what I am having. So having marked out this level, what is the next thing I want to do? I want to mark my point of interest. So one of my first point of interest, of course you know, is this order block that break the structure. So I've marked out this order block that break structure. So I've marked it as my point of interest. And then the only point of interest in this movement is that order block. Okay, this order block here If you don't know what order block is, you can watch a video on this channel where we have discussed about order block. So now that I've marked my order block, what is the next thing? I will now wait for price, right? I will now wait for price to come down. Now the price has come down. I will wait for price to pull back. As from 50, I don't have point of interest at 50 level. So you can see now that my point of interest starts from my 61 to 100 level. And of course, you can see that price pull back all the way to almost 75.8 zone of my Fibonacci tool. So now that price has come to my point of interest, which is the order block, I will move to my 15-minute time frame of the order block that I have marked. So let's go to the order block. Beautiful. Now look at this. This is the movement that breaks the structure, right? Now price has pulled back. Okay, so now you can see that price is in my point of interest. Please, I want you to pay attention to something. Now this is what will give me my sniper entry on the 50-minute time frame. So look at this. When price come to my point of interest, I will now pay attention to my default Bollinger band, which is the one with the blue line. You can see that now price is ranging, and then this Bollinger band begin to shrink together. You can see how they are shrinking here. It become more tighter, and immediately after that, I will now wait for price to break out. I know that this is a downtrend, right? So I'll be expecting price to break out to the downside. And of course, you can see that price break to this downside. And then immediately price break this downside, you see how price will test this middle Bollinger band. So my entry is here. I will sell at this point, and my stop loss will be at this high. Someone asked where is the stop loss is meant to be. The stop loss is meant to be at the high, that is at the above the 100 level of my Fibonacci retracement tool. That is where my stop loss is meant to be. So this is my entry. This is my entry. And after that, here is my stop loss. My stop loss is meant to be at that 100. And then my take profit is going to be at the low. You see this low? Because this is a downtrend, it is expected that price will come down to take away the liquidity of the lower low in order to create a new lower low. So here my take profit will always be at this zone. So here my take profit will be somewhere here. This is my TP, right? Here is my entry, and then here is my stop loss. And then you can see how price plays out beautifully well. So there is no two way about it. This works. It is a workable, proven strategy. So you have seen that how this works, and then after that again, price pull back. So you keep repeating the same pattern, and the same pattern. This is the last but not the least movement. Let us highlight this movement. All of this move is the impulsive move. You can see that this move break away this structural point. So what is our point of interest? Our point of interest here is our order block. So this is the order block that initiates that move beautifully well. And then we have a slight smart money cube which almost fall inside of the order block. So we are not going to remark it since it falls inside the order block. So if we are to put our Fibonacci retracement tool now, you can see what happened. In this scenario, price pulled back to 75.8 again, which tap into the zone of both our order block and our smart money cube in that zone. And afterwards, look at what happened. You can use this candlestick pattern on the 1 hour. This is a bearish pin bar. You can see this range. However, let's go to our 15 minutes to find our entry. Sniper entry on 15 minutes using our default Bollinger Band and the special Bollinger Band setting. So here we go. Sorry for the background. Look at this, what happened here. Immediately price did what? Price break. We retouch that zone. You can see it, and then closes below, break out, closes below the middle Bollinger Band. You can see that shrinkage there. So when price break to the upside, you know that this is actually a manipulation because this is a downtrend. So you will not buy. You already know the direction, so you are waiting for the price to break. So price will now break to the downside here. So you will now sell from that zone. Your stop loss is here. And of course, you can see where your take profit would have been. So this is so great. This strategy is working and has been proved. I want you to backtest it. Watch the video more than once so that you can understand it. If you have any question, you can ask in the comment section. If you are yet to subscribe to this channel, please do well to subscribe. Turn on your notification bell so you'll be the first to get notified when we upload our next video. And as well as please support us by liking the video, make comments about what you have learned from this video. And there's a link in the description of this video where you can join our Telegram group for free channel and as well as enroll for our training and mentorship course at a little fee. So all of that is available when you join the Telegram group. So this is how exactly you can trade this strategy. You can see how easy it is that you can combine all of this. So now that price has fallen below our middle Bollinger Band, it is now a double confirmation that we are fully in a downtrend. So you can see this now. We are fully now in a downtrend. So any other pullback is going to be a continuation of a downtrend. So any time now that we are already at below the middle Bollinger Band, anytime you go to 15 minutes and your Bollinger Band shrink after a pullback, what I mean is if price pull back maybe to somewhere and then you go to 15 minutes and you realize that your Bollinger Band begin to shrink and shrink together and it break out all the downsides, another opportunity for you to continue in your sell trade. Thank you for watching. If you have any question, please use the comment section and see you in the subsequent video.